Ladies and gentlemen, welcome to our today's feature presentation, Trade Price Continuation Patterns. Before we get there, let me briefly introduce myself. My name is Thomas Barman. I'm the inventor and owner of Never Lost Trading and TradeColors.com. Tonight we look at TradeColors. And I also want to make you aware that there is a risk in trading and you should consider your personal circumstances not to trade with money you cannot afford to lose. With that said, we'll move ahead. So to predict the price, we find stages where there is a pre-stage to a price move and a continuation stage to a price move. Those are all recordable and they are repetitive and they are predictable. In this presentation here, we want to work with the continuation stages, which we packed into the algorithms of our TradeColors.com mentorship and indicators. A trading system is the tool in your hand that supports you for predicting the future, from where a price move is right now to where it might come into a pattern where it does a strong directional move. You see here on the left, the algorithms used in TradeColors.com help to color code downside moves, and by certain entry rules, and we come to that, you'll see where you can enter a trade and follow this continuation move within having defined entries, defined exits, and defined stops, or even adjustment levels. What do I mean with adjustment levels? Some of the assets are easily to protect, so you can make a hedge and hedge a position when the trade goes against you instead of taking the loss, so you'll be able even to turn losers into winners. However, it's not so easy because financial markets are complex. And simple mathematical based rules like, for example, moving averages usually don't get you where you want to be, or form-fitting correlations like Elliott wave, where there is the ABC and a 1, 2, 3 wave and the one has to follow the other. That's usually not how the markets work. Then you only have a random chance if you use such models to predict how they break out, because you see here you have a combining pattern of a school of fish. When you want to predict how they break out, so here in a releasing pattern and how they combine again, you cannot basically use a model that looks from the outside in. You have to use a model from the inside out, where you understand with the help of computer technology which of those are leaders. When leaders make a move, then you can go with the leaders because that's what it's going to be, and that gives you a predictability. So it means you look much more at the interactors, at their interaction mathematically, and from there you start predicting in which direction the school of fish is going to move with a high predictability. When we come to the base intercorrelation of the financial markets, we can say one thing: all transactions take place in the market, which is the medium that allows buyers and sellers to come together for a specific good or service to make the exchange, to find a point where they can find agreement and from there move forward. So it's a very important intercorrelation, which we are using in everything we do, because we call our system activity-based system, because here when the activity in that buy-sell relation changes, it changes the price. When the price changes, we have a medium that is recordable, and we have a potential price continuation pattern when certain conditions are fulfilled with which we can move forward. The good thing is we are dealing in electronics markets. Basically all the data are available to us as much as they are available to the big brokerage houses and the big market makers and big investment firms. So today, as private investors, we are par to par with the big firms, so that's good. But on the other hand, we also have an edge, because we are not holding such huge positions. We can enter and exit entire positions at once, and that's your edge as a private investor, where you can make a difference for yourself when you see, okay, that's a pattern I go in, that's a pattern which releases I go out, and this is how I do my trades with best information, with computer algorithms on hand that help me to predict the future and make sound trade decisions. Let us go on from here with the base intercorrelation, the economic principle. The price that participants pay in a market transaction is determined by supply and demand. So when supply and demand comes to a conclusion, so I want to buy for 100 and somebody says to me, and I want to sell it to you for 100, then we find an agreement because we have two matching bills, and then the transaction can happen. And then the stock market goes very, very fast and easy, and we can participate in that. and as a consequence, a change in supply and demand. So if there's less supply and there's lots of demand, what will happen? Prices will go up. So it triggers a price change. These price changes are recordable. And the good thing is we can make that, oof, my chart moved ahead a little quick, in the stock market, in the commodities market, in the treasury market, in the currencies market. So those principles are always the same. And the good thing is also the key interactors in those markets are the same. The big institutions dominate all of them. And that makes markets for us predictable as long as we use a good and sound activity-based algorithm. And we get there. I show it to you step by step. Now let's capture that knowledge into a trading model, yeah? Because when the key influences of the financial markets leave a trace, we can work within putting that trace on a chart, and we can work with an algorithm that gets us in a trade or not if that continuation pattern moves on. And so take a look at the left. So we have, after a sequence of red, we'll have the first blue candle, so 1 and 2. We define an entry, we define an exit. Yeah, and I'll show you how that is done step by step while we are working together here. So then that sequence comes to an end. How does it come to an end? A 2-candle red sequence forms and gives us the trade entry and gives us a target 1, which we use as trade exits. So when we have that on hand, we are having a high probability setup, and you and I will look at the chart and see more good trades than bad trades, then it's high probability, and we can move ahead and can put a check mark on that we are having a trading system that gives us the chance to be more right than wrong. And if we then have a high participation rate, we are in the game for making money in the financial markets. Let us jointly capture defined entries, defined exits and stop levels, and the probabilities. What I mean with probabilities, we'll see how often we win in following the system in comparison to how often we lose. And out of that, we'll see how likely will it be for us to make positive results from those financial transactions. Yeah. So therefore, first, what are our entries? Yeah. So when do we enter a trade? After a red candle or after a red candle sequence, when 2 blue candles are painted, you enter the trade when the high of the second blue candle is surpassed. So it's very simple. Huh? Yeah. The high of the second candle in that sequence is surpassed, then you're gonna go and you enter trade. So now a short entry. So after a blue candle or a sequence of blue candle, you see 2 red candles painted. So a price change is happening, and you enter the trade when the low of the second red candle is surpassed. So those are our buy and sell rules, and we need the chart to validate them if that is really happening. But what is it also telling you? You can work with a buy stop or with a sell stop. Very simple and easy. You can put it there even in if you trade just the day session of an asset. So you can pull it there the night before and it autofills because you know what you're doing. And we learn also where you put your stop levels and exit levels, so everything can be pretty well done automatic. Yeah, so let's move ahead and we see the first chart. So from the left to the right, we'll see the instances here where blue candle sequences come up, then it's interrupted by that big red candle, another blue candle sequence comes up, but it's not validated. And this is how we go jointly now. Take that chart. What you see here is the chart for most recent chart for Apple Computer. So it's the year 2015. We are looking between mid or end of July and beginning of March. Yeah, March now, beginning of May. Yeah, so just this period we are looking jointly at and see how many good trades, how many bad trades we had. However, before we go into the chart, let us look at the reality, because you know algorithms always are methods that try to replicate nature or the real happening, but we'll need to see if there is a real background behind it. So what's happening usually in a market? The leaders initiate change. Yeah? So they move the price up or down for an asset. The rest of the market recognizes, and then when the rest of the market buys into that change, the price starts moving into a direction. So what we do with the never loss trading system, and here our base system, or in the introduction of activity-based trading, TradeColors.com, we look at that situation where institutions make a motion in the up or down direction for an asset. When it gets confirmed, we jump in. We have an approximator that helps us to understand how far the price move will most likely reach, and I show you all this on the chart. And from there, then we know our exit and we know our stop level as well. that we need to give the price a certain, let's say, wiggle room so that it can expand in the right direction without taking us out by a stop if we use one. And then we have a trading system that is really replicating nature. The crowd follows the leaders. Leaders make a motion. When the crowd comes in, we do as well. But by the nature of the private investor having less impact in the market, so because you just trade smaller size compared to a big institution, you are having more ability to go faster in, go faster out. And now let us look jointly how it looks on the chart. Yeah, so first trade entry here on a chart that we were looking on prior. Here the first two candles. Yeah, so that's May 15th here. That second candle formed. And then we could have put a buy stop, so above the high of the candle, if the price next day reaches there, that was then May 18, then we would be in a trade, and the approximator up there will give us an idea of how far this price move most likely is going to reach. And then we'll do that continuously and move in that direction and move for a certain predefined motion, and do it over and over and over again, because you will see it's repetitive. Yeah, this action is repetitive. And then you see here there was another candle setup. Yeah, that was not validated because next candle didn't trigger and take out the high, but then we had a motion to the low. And this is this repetitiveness of institutional action being cyclic in the one direction or in the other direction, or even a little more trending. And we will jointly see in particular here with momentum trading how we can capture those moves and participate in them. Yeah, let us move on and then see, wow, there were many trades not validated here. So here in that middle section, yeah, let me highlight it for you. In that middle section here, a lot of trades set up within doing a two candle continuation pattern, but that didn't get confirmed. But what also happened, you didn't get tracked into a trade. And that's very important, because you know the worst thing, and this is what usually happens to the retail traders, the retail trader opens a long position right here, gets stopped out. Opens a short position to the other hand, gets stopped out. And then it's no more fun, because when we want to participate, we want to do more wins than losses. And with the method that I'm showing you here, you can be part of this, doing much better for yourself within producing a much more meaningful ratio between wins and losses. Yeah, because when you look at the chart, when you look at the chart here, then you see the orange boxes that you got up here. They were winning trades because they fulfilled the candle sequence, and we took them out at their continuation pattern target. But for 6 trade setups, which would have not led into the right direction, we didn't get tracked into because we have these conditions. So if the next candle doesn't take out the high-low, we don't trade. Isn't that something which you could easily latch on and do? It's not complicated. It's a very base system. So you have a continuation pattern, and when its conditions are fulfilled, you trade. If they are not fulfilled, you do not trade. And you find yourself, and I show you that with your watch list also, the opportunity for different assets, so that you are not only focusing here on trading the Apple stock, but you have maybe 20 to 50 or more individual stocks you want to look at, and then you'll take those that have favorable setups that get confirmed. I hope that we clearly expressed our trade entry conditions. Now let's come to target setting. Yeah? On the left upper corner of our chart, we always have the price move approximation. So at every bar, this algorithm is giving you an idea how far, when an institutional engaged price move happens, will it reach. The result here was $2.11, and that would give you 1.7% return on cash. Then we have a second information that says what's the maximum expansion that you expect. Yeah, there's 2 candle high low, and in this case it was, oh sorry, my mouse goes a little fast. In this case it was just very close to the first target, which is unusual, but in the price continuation pattern we'll see how much this is helping us, having that information on hand at the beginning of the trade, to be able to harvest to the fullest extent on a price move without getting stopped or getting taken away when a price potentially reverses. So let us put that all together. So we want to have our entry condition, we want to have our target, and we want to have stop level or price adjustment level. So we'll put it all together step by step. So here at that bar, the entry was 129.49, and what we do is, in our buy stop order, We just don't say that that is the condition. We offer on the buy stop order about 2% of one SPU, that's 4 cents here, or 2% of one price approximation of $2.11. That's where we start our buy stop offer, yeah, at 129.53. Then we set our target from the high, $2.11 to the high, so gave a target of $130.60. Then we have a stop or adjustment level that we also calculate with the help of an algorithm, and that was here at 127.79. That should help us to give enough wiggle room, but not too much wiggle room to be in the trade, because here, when you see how it panned out, our reward on cash was about 1.6%, while the risk was 1.3%. So we have a higher reward than risk, and we can also, by using trade adjustment methods, reduce the risk tremendously. But now it gets beautiful. Look, you don't have to calculate all of this by hand. We give you in TradeColors.com this model, and by just entering 3 simple conditions, yeah, which you can do up here. Yeah, so you enter the condition of approximated price move, trade candle high, trade candle low, then everything else will be calculated for you and gives you an idea, okay, that's my risk approximation, that is my reward approximation, and even goes down and says, okay, based on your normal trade behavior, you should be able to invest a lot, yeah, so one of your lots in it. And so you might ask, well, wow, what's a lot? It then derives from your account size, and you assume positions that you want to hold on the account size, and then it tells you you can buy 108 shares here, so we would buy 100 shares, and that's your investment volume, and you have a 1.6% expected return to a 1.3% expected risk in that trade. On the other hand, if you wanted to trade a call option here, then you put a couple of call option conditions in here, very simple. So how many days to expiration, what you pay for the option, and what the delta was. And then afterwards, it goes and gives you an idea of what can be achieved with that. So with an investment of $1,900, you might be able to achieve a return of $1,300, but on the risk of $1,479. So all of these, just by simple inputs, will be given to you with those models to make your life easier as a trader, because you know we want you to focus on the real thing, on trading, and not on calculating the simple math equations all day long. So therefore we help you with that. Let us see now how that looks all on the chart. Yeah. So where was our trade entry start? Right here. So you see that point here. So the orange box identifies that was our trade entry. The 2 target lines, yeah, $2.11 or $2.33 from the high of that candle, and we had the stop equated and put right here on that red line. So if the price comes down to here, we either have to adjust our trade by working with options in that case, or we'll take the stop. So we take a hard exit. So now that we see this, how did it go on? Yeah, how did we move on from here, and how was the price development in its continuation pattern? And you see here, oh wow, from that orange candle, the next candle ticked it out. Here we saw that prior even on the chart, and when we reached those critical price levels, you see here with that candle, bang, we are coming down. Why are we coming down here? Because institutional orders were sitting there. They did kind of a similar equation. The price move was exhausted from where it started, and so therefore supply came in and ran the price down. And you want to be out here with a pre-calculated exit rather than taking the hit. So key question now, how to find those trades, yeah? And we're making life easier for you, yeah? Because you have 3 ways of doing that. We have a subscription service where you can get those emailed the night before, basically into your account, and so then you act the next day on what's hot. Or you can have the scanners, which come with NLT Top-Line. Or what you also can do from now on, because we just added that as an additional feature to TradeColors.com, you have a watch list with an evaluator. On your watch list, you can put those assets that you want to trade. Let's say, being a forex trader, you have your forex pairs on them that you favor. You be a stock trader, you have your favorite stocks, and will give you up and down sequences highlighted on this. Yeah, so up sequence with a 1, a down sequence with a -1, and you see here a couple of futures and forex pairs. and a few of them here, so here's a -1 and a +1, they have them on different time frames. The first time frame is a 1 hour equation, so it looks at 1 hour, which of them has a 2-candle continuation pattern on a 1 hour chart and on a daily chart. And when you sign up with us, we give you up to 4 time frames. We work with you what are the favorable time frames you trade, and then we'll give you that on the watch list so that you can see for the assets you prefer to trade which ones have a trigger, and from there you can go easily to the chart. So how does it look in detail for stocks, for example? Same thing here. None of the stocks that we listed here had a 1 hour signal because it was dull, but we have a few that had or let's say 2 that had a setup on the daily chart, yeah, ABT and Pfizer, yeah, PFE. PFE had a short setup, so what do we do from here? We go to the chart and look for it, yeah? So, yeah, that was the past, so we say, okay, did it work in the past? Oh yeah, so this candle setup went to the downside, indeed, and then we had a setup here, it went to the upside, and now we are setting up to the downside, and that would be basically happen in this week. However, there's one thing, earnings. Earnings are around, and we're always pretty cautious around earnings, so don't know if that's the strongest trade at that, but we would put it in our equator, see what the lot size is, the risk reward, how to trade with it, but over earnings we're always a little more cautious because a lot of things can happen. So you see now continuation patterns, and now with the help of these watch lists you are able with just a click of the mouse to find places to trade and to be continuously in the market, which is important because you want your money to be at work. We had started out with examples for stocks. Let us now go into a couple of other asset classes, and you see the same happening is portrayable and the same predictability is there. Let us first look, for example, here at trade setups for the Euro US dollar, the most recent setup. So here we had no directional setup coming in, but there was a setup and absolutely came to target. And right now we would be in a long setup to the upside here, so stops down here. Because these 2 candles were putting the trade initiation setup, and in its continuation pattern we're in. But also what you will learn is we try to be in a trade at max for 5 of those bars. 1, 2, 3, 4, 5, then it's time to get out. So 1, 2, 3, 4. Yeah, so if this 5th bar goes our direction, is fine and tickets the target, but if it's not going our direction, we also have a time-based exit. Isn't that also good that my duration of the trade is most likely 5 of the same color, and if after 5 of the same color my target is not reached, it's also sound to take an exit because you might have a reversal, and when after the reversal a new setup is going to come, you'll go back into the trade. That's all built in, making your life easier as a trader with TradeColors.com. So let's move to a next example. What you have here, now you have the Euro US dollar on an hourly chart, and you see, oh wow, yeah, fantastic, we had nice setup. So the long setup wasn't confirmed, the short's confirmed, nice. The long setup's confirmed here, and now you see no trade. Yeah, so here next candle didn't tick out the high, no trade. Next candle didn't tick out the low, no trade. Next candle didn't tick out the low, no trade. And number 3 setup you have here, and again you have here no trade setup. What is it going to tell you? Again, as we had it before, when situations and directions do not hold, because we have a very cyclic environment, we most likely with the system not in a trade, while if we get in a directional price move, we have a wonderful opportunity to be in a trade and follow through in a favored direction with a predefined risk. You think that's doable for you? Will take a change in your trading? I hope, because this is why we're sharing that with you. Does it also work for like a tick or a range bar chart? Yeah, so here we have a range bar chart, so you have many more trades on that, and you see also there's some losses in it. Yeah, so the range bar had a nice win coming out here. Yep, new setup to the downside, not confirmed. This one's confirmed. And what do we have here? We have like a 20 tick range. Yeah, so that's what we tick for, or let's say at the 20 pip range, or depending if you take these mini pips, then we have a 200 pip range. Yeah, so this is what we are trading for. But you see continuation, win, win, that was a loser, win, 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 win. So we had 6 winners and 2 losers in a very short period of time. Those are just basically less than 48 hours of trading. Yeah, so that's between those bars here. That's a 24-hour period and a little more. So that's a lot of good trades on a very meaningful tick range, and you can be part of that. We'll teach individually. So all of you who are interested, you will not need to listen to something that you're not interested in. If you trade, for example, Forex, and I refer to Apple, everybody will get tuned on their assets of favor with their risk tolerance, and we'll work together individually to make you the trader that you want to be. Aside from TradeColors.com, which I'm introducing tonight here, there's other systems that we work with, and you're always absolutely free to choose one of those systems to come on board with. I'm just featuring the TradeColors.com today with its unique new features of having a position sizing model and trade equation model, and also having the watch list. But with Top-Line, that's definitely all integrated on a much higher level, because you see here you get even more trades, much more specific when the market turns around, with much more information on the chart where you can fine tune in to its target, because targets are always set by a dot on a chart, and you can follow all those price moves and trade where key successful traders want to trade when prices turn. Comparing the two systems, we see TradeColors comes with one indicator, while Never Lost Trading Top-Line comes with 20 indicators supporting your trading. 4 hours of training, 20 hours of training, so there is a considerable difference. But the good thing is also here you have still a high probability trading system, very simple and easy entry and exit rules, and it comes at a budget price of $2,497, including now for the first time the watch list and also the position sizing model. So for users who use already TradeColors.com, if you want to add that, you can do that for a fee of $497. Includes also 1 hour of training. Within those new features, you can do that. But here, when you pay the tuition, yeah, and you want to upgrade down the road because you paid yourself back with that and you want a higher participation rate in the market, you can move ahead and get that equated against your payment for the higher level system. So what does it mean? You get credited $2,497 if you upgrade down in the future. So within that, you have an easy and a good start. If you need a higher participation rate or want a higher participation rate to take more money from the markets, then you can move up to the next level system, getting credited what you invested already on the first turn. We want to make you sound traders, and so therefore we always teach one-on-one. Yeah, it's not a classroom style, it's one-on-one at your available times, at your available focus, because you might not be interested in heating oil futures because you might not trade them. But if you trade them, we focus with you on it. That's a weekly chart, for example, because weekly charts are very good. That's how people position their heating oil futures. And you see here how we are capturing that nice. So we had 1 good setup, 2 good setups, 3, 4, 5 good setup, and no loser within that. But this is special knowledge that we always want to share with those that want that special knowledge. If you rather trade stocks, then we'll focus on stocks together. Yeah, so this is, for example, also for somebody who does hedging. Yeah, so what's that? Random length lumber. Yeah, so somebody who's producing wood beams, yeah, and sells it at a fixed price into home improvement stores, they need to hedge their position, and this is how they can. So here, go long, yeah, so put a long position out. Here we would have lost, but then we have 4 winners basically and 1 loss within hedging the position, and we can go down again. So always one-on-one training, because not everybody is interested in all those commodities, in all those stocks. So therefore we're working together. If you want from us a list of stocks or a list of futures that are easier to trade than others, or currency pairs, absolutely we'll do that all. We'll work with you. We want to make you a high probability and successful trader so that you can move ahead with your endeavors in the financial markets for making better decisions than before, and for making more sound decisions and more wins than losses. Yeah, how can you reach us? Yeah, so you can either call the office 866-455-4520 or contact at neverlosttrading.com, and you can even schedule your personal hour with us when you want to look again, okay, what's the system going to give me, what do I need to focus on best. And we work with PayPal, so if you want to make one payment, that's usually directly with us. but we work with our partner PayPal. If you want to have a credit, it works through them. It's much more easier than they do it because we are not a financial institution, we're an education institution, so therefore we found a strong partner to work with. So what do you all get in these mentorships? Software will be server installed. It goes into a system called Thinkorswim, which is a free trading platform. You don't even have to do funding. And you get real-time data. That's very, 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 very important. Yeah, you have entry-exit stops as we worked them out today here. You have the position sizing model. That's new. Yeah, so prior users didn't have it. So that's the newest feature and improvement that we put on. You know time in the trade. Yeah, 5 bars in one color. So then you get out. You have the trend finder in your watch list where you see by the +1 and -1 which one triggered the 2-candle sequence on multiple time frames. And we'll work with risk handling, so because that's very important that you be your own risk manager. All of this comes for a price of $2,497, and you can sign up online, or you write us an email and we send you an invoice, an educational contract, or you want to say, okay, I'd rather go with a higher level system like here Top-Line that sells for $9,997. And when you start with TradeColors and you upgrade later to it, you get your tuition acknowledged and credited. If you're ready for this, I hope we gave you an exciting presentation with a different outlook of how you can come with candle colors into the world of algorithmic trading and activity-based trading, following price patterns to the upside, to the downside. Now we include watch list indicators and position sizing model, a novelty that helps you to stay engaged in the trading and that helps you to make good and sound decisions. Yeah, so we're looking forward hearing back from you. We got a couple of spots open because you know we concentrate on one-on-one. We're not always available for all the programs, so go ahead, call us 866-455-520 or contact neverlosstrading.com, and we are happy to welcome you in the world of activity-based trading. At that point, I want to thank you very much for your attention, and we are looking forward to hearing back from you. Bye-bye.